So in 2020, we've just seen a record high after record high after record high in home values. According to the National Association of Realtors, home values have increased 15% over the last 12 months. So if you own a $400,000 house, your home's value just increased $60,000 over the last 12 months, which is unbelievable. But if you take a look at the data a little bit deeper, that 15% actually came out of just 4 months. So from June until September is when we saw that entire 15% growth. We don't have October's data yet. That's going to get released later on this month. So today I wanted to answer the question, how high are home values ultimately going to go? And when are we going to see a market correction or even a housing crash, lowering the home prices? And so all markets really come down to two main catalysts, supply and demand. If you have a neutral market, if you increase the demand for homes, for example, home prices are going to go up. If you have a neutral market and you decrease the supply of homes, home prices are going to go up. What we've seen over the last 6 months is a huge increase in demand and a huge decrease in supply at the exact same time, which is why we're seeing home prices just skyrocket. So let's dive a little bit deeper into each of these elements, the supply and demand, and try to figure out what they're going to be in, let's say, 12 months from now. And I think that we can actually get a pretty accurate estimate. So let's first dive deep into the demand. Why do we have such a high demand for home prices right now, and is this demand going to be sustainable? So the demand for housing really increased when the Federal Reserve lowered their federal lending rate to near zero. So this is the rate that the Federal Reserve lends money to big banks. Big banks can then lower the interest rate that they lend money to consumers like us to buy homes. And the Federal Reserve has already come out and said that they're going to keep that federal lending rate at near zero until 2023. So that stimulus right there, the major stimulus that is causing this huge demand, is going to stay in effect until at least 2023. And believe it or not, I think that interest rates may actually drop even lower, which could even increase the demand for properties. So if we take a look at what interest rates were 12 months ago, so November 2019, we see that the average 30-year fixed rate mortgage was 3.69%. Today, that average 30-year fixed rate mortgage is 2.78%. So that is a difference of 0.91% over 12 months. So if mortgage rates continue to drop at the same rate that they have been for the past 12 months over the next 12 months, that means 12 months from now, we could see mortgage interest rates as low as 1.9% on a 30-year fixed rate mortgage. And if that does happen, then yeah, absolutely the demand from buyers is going to stay consistent, and it may actually increase as we see those lower and lower interest rates. Now, there is another catalyst that could decrease the number of buyers in the market, and that's essentially how well our economy does. And if our economy does suffer over the next 12 months from maybe a national shutdown or any other repercussions, we could see the unemployment rate go much higher, and that could impact the number of buyers in the market. But I do want to point out that we've already seen unemployment rates as high as 15%, and right now they're sitting around 7%. And all through that range, we've still had huge demand from buyers, and we've still seen home values absolutely skyrocket. And the big reason for that is even though we're seeing huge unemployment levels right now and a big pool of people who can no longer qualify for a mortgage, we're also seeing a huge decrease in the supply of homes. According to the National Association of Realtors, we've seen 20% drop in the number of listings hitting the market over the last 12 months. So really what that means is if we have 20% fewer homes on the market, we could have 20% fewer buyers as well, and it would still even out. So at the most, we've seen 15% unemployment rate. That number could go up to 20%, and it still won't be high enough to really impact the home values and the number of buyers in the market. And the less and less inventory we have in the market, the less number of buyers that we need in order to really move that market. And if we look back at the last 6 months or so, it appears that there is no major correlation between unemployment rate and home values. Even when we had high unemployment rates, we're still seeing massive gains in home valuation. It appears that already that other 80% of folks who are employed and doing well they are enough in order to drive the housing market. So in my personal opinion, I see the demand for real estate staying pretty consistently strong over the next 12 months. But on the flip side of that, let's look at the supply of homes in the market right now and see if we can extrapolate out what that supply is going to be in the next 12 months as well. So we've actually seen a pretty consistent reduction in supplies over the last 10 years or so, but over the last 6 months, we've seen that dramatically get cut. And the biggest catalyst for this is going to be the virus. There's just a lot of people out there who don't feel comfortable having 20, 30 groups of strangers walking through their properties right now. And I kind of don't blame them. So there's a lot of people who took their listings off the market, and a lot of people who simply, if they have the luxury of when they move, they just decide we're gonna wait until this whole situation is over before we list our homes. And that's kind of the biggest reason why we have a reduction in inventory. Just sellers are scared to have complete strangers walking through their properties. And so we can kind of quantify this and really analyze, is that fear from sellers going to get better or worse over the next 6 months, over the next 12 months? And unfortunately, I think it's going to get worse. It's going to get much worse, especially over the next 6 months. So we're essentially in the third surge of this virus, and we recently just saw over 132,000 cases diagnosed in a single day. And we've seen the highest number of deaths in a single day at 1,600 deaths. And unfortunately, I don't think the situation is going to get any better over the next 6 months. That's what all the projections are saying. And unfortunately, the number of deaths is going to increase. It typically lags behind the number of cases being diagnosed by 2 to 3 weeks. So we are going to see some very scary headlines over the next month, 2 months, 6 months. And that fear that these scary headlines is going to create, and rightfully so, this is a very scary situation, but that fear is going to keep far more sellers from listing their homes right now and allowing complete strangers walking through their properties. So yes, we are going to see a significant decrease in inventory over the next few months. It may even be a larger decrease than we've already seen this year. And it is true that we do have some vaccines in development, but the truth is the experts are saying that those may not be ready until summer of next year. And even after we have a vaccine that we can mass produce, we have 400 million people living in America. It is going to be a ginormous feat just to get that vaccine logistically out to all the individual people. And typically vaccines are not 100% effective. If a vaccine is 70, 80% effective, that's pretty good. You're also gonna have a lot of people who don't wanna take it or who don't wanna be the first people to take it. So if we're relying on a vaccine, it legitimately may be next year, like 2022, before we have this whole situation under control by relying on a vaccine. Now there's another option, and that's simply having a national mask mandate, which we may see over the next 6 months. And in fact, the CDC director recently came out and said that simply wearing these face masks and socially distancing is gonna be more effective than the vaccine ultimately will be. But over the next 12 months or so, we may see a combination of face masks, socially distancing, and the vaccine. And yeah, this could have an impact and try to lower some of these numbers. But realistically, I don't foresee us really getting this whole situation under control until 2022. So what that means is that we're going to see a significant decline in inventory over the next 12, 18 months until we get the situation under control. There's a lot of sellers who don't feel comfortable listing their homes right now, and until they feel comfortable, until we start seeing some positive headlines in the news, we're not gonna see that increase in inventory. So over the next 12 months, we're still gonna see a huge demand from buyers and a decrease in inventory. And in fact, that decrease in inventory may accelerate and be more severe than it has been over the next 6 months. So yes, I honestly think that the growth that we're seeing in the housing market is going to go on for at least the next 12 months. So let's extrapolate the growth that we've been seeing in home values over the last handful of months and extrapolate that out over the next 12 months. So we've seen an increase in home values of 15% over just 4 months. From June till September, home values have gone up 15%. So that's an increase in home values of 3.75% per month for 4 months in a row. So if we multiply that by the next 12 months, we get an additional increase of 45% in your home's value. So on a $400,000 house, that means over the next 12 months, you could see an increase in your home's value by $180,000 if we continue to see home values increase at the same rate that they have been for the last few months. Now, if we add that 45% increase over the next 12 months to the 15% increase we've already seen since June, that means from June 2020 to November 2021, you could see an increase in your home's value by 65%. So in a $400,000 house, that's an increase in equity of $260,000 by this time next year. Now, you may be saying that these numbers are outlandish and there's just no way that these high home values are sustainable. Our economy just wouldn't be able to sustain these numbers. But once again, I want you to take a look at the Canadian housing market over the last 15 years. In 2005, the average home value in Canada was $250,000. 15 years later, it is now $600,000. So in 15 years, the home values have almost tripled in Canada. And this shows that these higher home levels are sustainable, that our society and our economy can sustain these higher home values, especially with the lower interest rates, which are going to significantly lower everybody's monthly mortgage payment regardless of the price. So are we eventually going to see a housing market crash though, and a reduction in home prices rather than an increase in home prices? And I think that we are, and I think that's going to occur spring of 2022. So right now, the biggest catalyst to these home values is the reduction in inventory. And that is out of fear. People are just too scared to put their homes on the market. And that fear is going to increase all through this winter, right? All through the winter, we're going to see a reduction in inventory. By spring of next year, we're still going to be dealing with this virus. In all honesty, it may not be until spring of 2022 when we really have this virus under control and people feel comfortable listing their homes. And at that point, what we're going to see is all those homeowners who wanted to sell their homes for the past year and a half, 2 years, but were too scared to, now they feel comfortable, and we're going to see all that inventory that could have been on the market all hit the market at around the same time, which is going to be spring of 2022. And I also think that we're going to see an end to the moratorium on foreclosures happen sometime in the summer of 2021. So that means that that's when the banks can start foreclosing on people. It's going to take an additional 6 to 12 months before we start seeing those foreclosures actually hit the market. So once again, in spring 2022, we're going to start seeing an increase in foreclosure inventory hitting the market. And we're going to see, again, a year and a half, 2 years of foreclosures all hit the market at around the same time within a 6 to 12 month period. So we're just going to see a huge increase in supply around spring 2022. And I do think that at this point, we're going to see so much inventory finally hitting the market that home values may actually start leveling off and coming down. Now, can you really call this a crash though? If your home's value shoots up $200,000 and then drops down $150,000, is that really a crash, or is that just more of a market correction? But I honestly don't think that we're ever going to see home values go back to 2019 levels. And I think that even with a major correction, there's still going to be a significant net gain throughout this entire market cycle. But regardless of what the housing market does over the next 12 to 24 months, if you want to learn 10 hacks to pay your mortgage off early, check out this video I did right here, breaking those down for you. Don't forget to subscribe and hit that little bell icon to get notified every time I upload a new video. Thanks so much for watching, and I'll see you over in the next video.